Imagine waking up one morning knowing your money is working for you every single day. Instead of the old-fashioned clink of coins, you're hearing the sweet digital sound of dividends hitting your account. Picture a life where financial freedom isn't just some lofty concept, but a tangible reality that you can feel, touch, and experience. Sounds pretty good, right? The best part is, this isn't just some pipe dream. It's within reach for you, just like it is for many others. Now, when most people think about retirement or financial independence, they might consider options like reverse mortgages, selling off possessions, or moving to more affordable places. These are all valid options, but there's another path that often flies under the radar: living off investment dividends. And not just any dividends, but enough to generate $2,900 a month, or about $35,000 a year. Intrigued? Stick around, because I'm going to share with you 3 ways to reach that goal faster than you might think. Understanding dividends. The basics. First off, let's break down what dividends are and how they work. Think of dividends as a kind of reward you get for owning shares in a company. When a company makes a profit, they can either reinvest that money back into the business, or they can distribute a portion of it to their shareholders, you and me. This payout is called a dividend. Let's say you own some shares in a company. If that company decides to pay dividends, you'll receive a portion of the profits based on the number of shares you own. These payments can come in the form of cash, either through a digital deposit or an old-school check, or they can be reinvested to buy more shares of the company's stock. Many companies choose to pay out dividends every quarter, but some do it monthly or annually. One key thing to understand when diving into dividend investing is the concept of dividend yield. This is a way to measure how much income you're getting from your dividends relative to the price of the stock. It's a simple calculation. You take the annual dividends per share and divide it by the price per share. For example, if you own a stock priced at $200 per share and it pays $20 in dividends each year, your dividend yield is 10%. Understanding dividend yield helps you evaluate different stocks and decide which ones might be the best fit for your investment goals. Now, let's get into the 3 simple strategies that can help you make $2,900 a month or $35,000 a year in dividends. Strategy 1. Covered call ETFs. The first strategy I want to talk about is investing in covered call ETFs. These are a bit unique because they offer income from both stock appreciation and dividend payments. Here's how they work. These ETFs invest in a portfolio of stocks and then write or sell call options on those stocks to generate additional income. A call option gives the buyer the right, but not the obligation, to purchase a stock at a specific price within a certain time frame. So, when the ETF sells these call options, it receives a premium, which is then paid out as dividends. Moreover, if the stock price rises above the strike price of the call options, the ETF can realize capital gains because it will be required to sell those stocks at the higher price. This strategy is a win-win because it provides income from both the dividends and the option premiums. There are several popular covered call ETFs to consider, such as XYLD, OILK, and EWZ. These funds offer attractive yields, often in the double digits, which is significantly higher than what you'd get from traditional dividend stocks. For instance, XYLD has a 12-month trailing yield of 11.83%, OILK comes in at 11.82%, and EWZ offers 11.81%. The beauty of these ETFs lies in their ability to provide a stable and reliable stream of passive income. However, it's essential to understand that there are some risks involved. For instance, the options may expire worthless, or the stock prices may decline, which could impact the overall performance of the ETF. Let's apply this strategy to our goal of generating $2,900 a month or $35,000 a year through dividends. Based on the current yield levels, you'd need to invest between $280,000 to $310,000 to achieve this goal with covered call ETFs. That's quite appealing when compared to traditional dividend stocks, where you might need around $2 million invested to achieve the same level of income. By choosing covered call ETFs, you can reach your financial goal of earning $35,000 a year or $2,900 a month without needing an excessive amount of capital. This approach offers a way to create a reliable stream of income while keeping the initial investment relatively low. If you're ready to take control of your financial future, exploring covered call ETFs could be your ticket to achieving the goal of living off dividends and enjoying the financial independence you've been dreaming of. Strategy 2. High-yield REITs. The second strategy involves investing in real estate investment trusts, or REITs for short. REITs are like teams that own, operate, or finance income-generating real estate, such as malls, office buildings, and apartment complexes. These teams make money from these properties and share some of it with their investors in the form of dividends. For those looking to earn passive income from dividends, high-yield REITs can be a great option. Some top REITs to consider include Two Harbors Investment Corporation, which has a dividend yield of 20.3%, Brandywine Realty Trust with a yield of 19.9%, and Orchid Island Capital Incorporated offering a yield of 19.4%. Historically, REITs have shown solid performance with an average annual return of around 10.8% over the past 20 years. This means that investing in REITs can be a smart way to potentially grow your wealth while earning a steady income. Of course, it's important to understand that the income you get from REITs can fluctuate depending on the economy and how well the real estate market is doing. While REITs can offer higher yields than regular stocks, they can also be riskier, especially during economic downturns. So, how much would you need to invest in REITs to earn $35,000 a year in dividends? Assuming an average yield of 10.8%, you'd need to invest about $320,000. However, this number can vary depending on which REITs you choose to invest in. One great advantage of REITs is that they often pay dividends monthly, unlike regular stocks, which typically pay quarterly. This makes REITs an attractive choice for those looking for a steady income stream. By considering this strategy, you can achieve your financial goals of earning $35,000 a year or $2,900 a month from dividends and start making your dreams come true. Strategy 3. Dividend Aristocrats. The third strategy I want to discuss involves investing in Dividend Aristocrats. Dividend Aristocrats are a group of companies within the S&P 500 that have a unique track record. They've been increasing their dividend payments to shareholders for at least 25 consecutive years. These companies are considered great options for those looking to earn income from their investments because they offer a reliable and growing stream of dividends. Some top Dividend Aristocrats include 3M, Leggett & Platt, and Walgreens Boots Alliance. These companies, on average, offer a dividend yield of around 7%, which is lower than what you'd get from covered call ETFs and REITs. But they are known for their consistency. Dividend Aristocrats are well-established companies with strong financials, and they typically perform better during tough economic times. This makes them a more conservative investment option compared to the other strategies we've discussed. So, how much would you need to invest in Dividend Aristocrats to reach your goal of $2,900 a month? With a 7% yield, you'd need to invest around $500,000. While this is a significant investment, it's still less than the $2 million you'd need with traditional dividend stocks to achieve the same payout. A smart approach would be to diversify your investments across multiple Dividend Aristocrats to reduce risk. By doing so, you can benefit from the regular income that these stocks provide while also enjoying the potential for capital appreciation. So there you have it, 3 strategies to help you live off dividends and achieve financial independence. Whether you choose covered call ETFs, high-yield REITs, or Dividend Aristocrats, the key is to find a strategy that aligns with your goals and risk tolerance. Investing in dividends is a powerful way to generate a steady income stream while keeping your principal intact. It's like having your own personal money tree that keeps growing and providing for you. But remember, the journey to financial independence is a marathon, not a sprint. It takes time, patience, and a commitment to your investment plan. Keep your goals in mind, stay focused, and don't get discouraged by market fluctuations. And hey, let's not forget, this is your money we're talking about. Make sure to do your own research and consider talking to a financial advisor before making any investment decisions. After all, it's not just about making money, it's about securing your financial future. So, what's next? Are you ready to start your dividend investing journey? Or maybe you're already on your way and just needed a little extra guidance. Whatever your situation, remember that financial freedom is within reach. And with the right strategy, you can wake up one day and find that your money is working for you every single day. Check out the video on your screen, where I'll guide you through how a simple $25 weekly investment in dividend stocks can grow into a $5,000 monthly income, using the easiest and most effective strategies available. Thank you for watching, and don't forget to hit that subscribe button for more insights on how to make your money work harder for you. Take care and see you next week.